Hi, very good morning. Another interesting judgment of Delhi High Court, Income Tax Act, Radhika Rai versus Deputy Commissioner of Income Tax. Another writ petition was by Pranay Roy, Dr. Pranay Roy versus Deputy Commissioner of Income Tax. So, facts of this case hereafter, because two writ petitions are there, Radhika Roy and Pranay Roy. I will say Roy's. They were having Roy was having, or we will take only Radhika Roy. Pranay Roy, PR. PR was having 50% shareholding in a company called RRPR Holding Private Limited. Hereinafter, I will refer as RRPR. So, Pranay Roy as PR, RRPR Holding Private Limited as RRPR. Assessment year is 2009-10. PR submitted return. Return was processed under section 143 and it was accepted. Reassessment proceedings were initiated under section 147/148 on the ground that purchase of shares of NDTV was carried out with RRPR at a substantially low consideration than the market value. RR produced documents, accounts, balance sheet, etc., whatever is in his hands. During the course of reassessment, AO issued another notice under section 142(1) and asked RR to show cause why the loan received from RRPR should not be treated as income, that is deemed dividend, in his hands under section 222(e). So, Pranay Roy submitted that the funds were received from RRPR in financial year 2008-9 without any stipulation of interest. Order was passed under section 147. AO did not make any addition towards the deemed dividend as proposed in the notice. That means it was dropped after accepting his reply. After 3 years, again Pranay Roy received another notice under section 148 for the same assessment year 2009-10. This time, the subsequent AO treated the loan received from RRPR and proposed to tax it under section 224(4), that is treating it as an income in the hands of a director who has substantial interest in the company. So, first reassessment proceedings, if you remember, it was under section 222(e). Second reassessment proceeding, that was dropped. Second reassessment proceedings under section 224(4), same income, that is loan received from RRPR. It was proposed to be taxed. So, second reassessment. This notice was challenged before the Delhi High Court. At that time, the writ petition was entertained 8 years back, and the Delhi High Court gave an interim order seeing the prima facie case in favor of the Pranay Roy and directed the authority not to pass any order. So, one of the contentions must be that the party should be relegated to the authority to submit their replies and then they can avail their statutory remedies instead of coming to the Delhi High Court. That was a submission made by the department. Delhi High Court said nothing doing. Allowing AO to pass final order and relegating Pranay Roy to avail statutory remedy after 8 years would be iniquitous and it will be a travesty of justice. The Delhi High Court noted that the first reassessment proceedings were initiated treating the income received, treating the loan received from RRPR as deemed dividend under section 222(e). Then RR naturally produced balance sheet, account books and other relevant information as called for by the AO. AO was completely satisfied and did not make any addition. Now, in the second reassessment notice, AO is trying to assess the same loan received from RRPR as income in the hands of a director who has substantial interest under section 224(4). Already I said that. The court noted that in both the reassessment proceedings, that is the first one and the second one, the issue related to interest-free loan received from RRPR. Court was surprised to see on the very same foundational fact the first reassessment proceeding was dropped by AO after accepting the explanation. On the very same fact, the second reassessment proceedings was initiated. Delhi High Court said initiation of second reassessment proceedings in such circumstances leads to harassment of assessee on the one hand and give rise to unpredictability or uncertainty, if not anarchy. Delhi High Court said the powers under Section 147 and 148 are exceptional powers to the normal assessment proceedings. Reassessment proceedings are subject to yardsticks and limitations prescribed under the Act. Once the power has been exercised, the same power cannot be again exercised to reopen the assessment on the ground that a new facet of the same issue emerges. The powers under Section 147 and 148 cannot be used casually and carelessly. Delhi High Court said that Section 222E and Section 224(4) are two sides of the same coin. Once the predecessor has examined one side of the coin, the successor cannot unsettle the already settled assessment because he feels wiser than the previous AO. You can't think you are intelligent. So the same transaction, one side has been examined. Now I will examine the other side. No, it says the successor cannot feel wiser than the previous AO. Assessee cannot be made to face the rigmarole or harassment of assessment proceedings again and again. Delhi High Court noted that reason for invoking the extended period of limitation of 6 years by the AO was that there was a failure on the part of RR to disclose fully and truly all the material facts for making assessment. In the second reassessment proceedings, AO said that the Pranay Roy, I said RR, the Pranay Roy or RR, everything, PR, everything is the same. Pranay Roy had opportunity to disclose the income during the first reassessment proceedings, but he did not do so. Delhi High Court said the primary fact was already disclosed by producing accounts, balance sheet, etc. Hence, it is absolutely baseless. The issue of notice is clearly contradictory to Section 149 and fundamentally and inherently without jurisdiction. Delhi High Court said it is settled the law that assessee is required to disclose the primary fact. That's all. The secondary fact, inference, etc., which can be drawn from such fact, is not his obligation. That is not his duty. These inferences can be drawn from this transaction. That is not his duty. Delhi High Court said the facts of the case speaks volumes about how the assessment proceedings are arbitrary and contrary to statutory provision, besides being against the fundamental principles of adjudicatory process. Delhi High Court, I think, was furious. It said, no amount of cost can be treated as enough for these types of cases. The court imposed a cost of rupees 1 lakh to be paid to Dr. Pranay Roy and Radhika Roy after allowing the writ petition. That is, it quashed the second reassessment proceeding notice. That is what Delhi High Court said. Thank you very much. Have a great day.